We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, after yesterday's big run sitting sideways. But within today's volatility, our SPY bot at 10:10 a.m. sent out a bear indicator. And from that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision. And put options went up 200% plus within minutes to an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY, fighting to stay above 405 here as it tried to bounce off of it. Rejected a key resistance exactly at 410 and some change. We're going to break it all down in today's video. But before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord, and by joining you'll become part of a growing community of investors, all looking to learn and grow together. So the first home run of the day was from our AMD bot. Our AMD bot sent out a bear indicator since 9:06 a.m. From that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision, and put options went up 100% plus within an hour, guys. And our second home run of the day was from RMED. We caught this one in the pre-market. We were looking for it to pull downwards, and within the day's volatility, it gave jumps of 10 to 20%. But later on in the day, going into the after hours, it jumped up to a highest point of 50% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, continuing to fight here to hold itself up after yesterday's big rally, right? From way down here at 394, 393 support, bounced over 395, went into 400, and right now hit highs here of 410. A lot of people are watching these areas very carefully here as it continues to try to hold itself up above 400. But we're going to break down why this is going to be pivotal going into tomorrow, whether it can make or break this rally, and what some articles are stating. But I'm going to pull up the bull and bear indicators and the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So yesterday we got a bull indicator here on the 30-minute since way down here at 394. Inflows were really strong. They crossed over, and all day today, even yesterday in the after hours, outflows had began. But I did state that in yesterday's video, as long as it stays above the midpoint, it will not completely destroy the chart. But while those outflows were going on, there was a divergence where it tried pulling itself up and it quickly just rejected, because even though the inflows are above the midpoint, the outflows continue to dominate and pull down towards the midpoint. That's what really matters here. And right now we're at a crucial level, really right there on the edge of the outflows versus inflows at the midpoint right there. These inflows need to pick back up and stay above the midpoint, go from red to green and pull upwards so it could start reflecting into the chart, because if it crosses over, things could quickly start to pull downwards and even probably even cancel this bull indicator with a bear indicator in the process. Now, what is the one data point that can come out tomorrow that can impact and make or break this rally? Well, that's unemployment data, guys. It could either make this go much, much higher if it comes out better than expected, and if it comes out worse than expected, things can get moving very quickly to the downside and cancel some of the great dovish, right, quote unquote, because some people are calling what the Fed said, Jay Powell said, on this date, right on Wednesday, that it was slightly dovish. Now, that doesn't mean that just because he stated we need to moderate the total amount of rate hikes and slow it down a little bit, not stop, but slow it down from 0.75 to possibly a 0.5, that all of a sudden that's very dovish. There's still a lot of other things he stated that were pretty hawkish, but this data point can really cancel out all this euphoria if it comes in worse than expected, okay? That's going to be super important. A lot of the markets are really expecting this to be higher than the number expected, meaning that unemployment is rising, meaning that the Fed's policies are working, right? Because the Fed wants unemployment to slightly go up a little bit because the labor market is too strong, right? But if it's lower or at expectations, it can shock the markets. And we have key levels to watch here. And then we also have these articles coming out here stating, even from Jim Cramer, right? He's notorious for getting things, right on time. I look forward to seeing your thoughts down below if you follow him as well. But right now, this is something, and by the way, I don't follow him. This is just an article that had a chart that actually is very interesting. But right now, they're pointing out how the 200 SMA, right, which is this purple line, we're getting really close to it. And if we break through it, this is where Jim Cramer and everybody is stating, oh, all of a sudden bulls are back in play, and that right now the overall markets are going to continue to hold strong and the bears may lose traction here. Well, that's not the case. We did this back here in the middle of the year, right? Beginning middle of the year, and we rejected it shortly after, and we continued the bear market and we rejected it here as well in August and September. So that doesn't guarantee anything just yet, okay? I think personally that it could actually go ahead and make a lot of confusion, or it could be a step towards some strength in the markets, but not guarantee it. It needs to align with the Fed actually loosening up and that their policies are working, and also that we don't go into a earnings recession, right? I've talked about that in previous videos. Then we also have here the S&P 500 is on the cusp of breaking through a level that might spell the end of the bear market. So all of a sudden, everyone's getting very euphoric, very excited. It's definitely a place and time to be a little bit cautious. It doesn't guarantee that we're going anywhere, right? And they talk about different levels here in this market and in this article. And basically, they're stating that 4,100, 4,200, which I've shared already in previous videos with you guys, that those are some key levels everyone's watching. And if it goes ahead and rejects that area, it's going to be very interesting if it could hold above 400 and how it fights there, or will it break below it? And then we need to see, could it break through 390 and how it reacts below that area, right? Because it's been holding itself up above 390 all this time for the last several weeks, since way back here in November 10th, right? When that bull indicator popped up, full transition, and it's just been volatility, and now it's trying to do another leg up. And the question mark is this leg up strong enough to create the new support to bounce up even higher? And we have all these different articles and all these different experts coming out and pointing out their thoughts. But when we zoom out here on 42 vision, you can see on the 1 week, we're still under a bear indicator here, right? We're finally above it, 400. We need to see this get canceled if there's any possible strength here. Inflows just crossed. We'll need to see if it stays that way or if it cancels itself out. And then on the 1 month, right, when you zoom out, you can see here how outflows, yes, they've slightly slowed down, but we're still below the midpoint and we're still under a bear indicator here, right? And even on this bear indicator, we tried coming back up in August to 430 and quickly rejected down. So right now, nothing is confirmed just yet. We're still under that bear indicator since June, and we're watching this, right? A lot of people are referring to the 200 moving average. That's a great place to look, right? Just like this chart here shows. But we've actually crossed it this year and actually went ahead and canceled out that crossover by crossing right below it again to continue the downward trend. So still watching this very carefully, not getting too excited. We need to see the data for tomorrow if it's going to make or break this rally. And the key levels that I'm watching here. The first thing I'm watching here is the inflow versus outflow, as the inflows are dominating, but you could see right there we're really close to the midpoint. Even though it's red, it's above it, and see if it crosses below. It's currently sitting at 0.08. When it crosses below, it goes negative. So I'm going to be watching that very carefully. And on the 15-minute within the volatility, It is very close as well. I'll be watching if it crosses downwards. It's under a bear indicator here since 408, and you could see how that bear indicator became a resistance all day, and it actually rejected multiple times around 408 area, and it continues to reject even towards the end of the day. So I'm going to be watching that on the 15-minute as well as here on the 30-minute. And then when we come over to the 1 hour, I'm going to be watching here as well. We're under red right now, even though we're above the midpoint. This is the one thing holding up the whole entire market right now, that these inflows are still dominating. Once they come over on the 30-minute, on the 1 hour, it could quickly start to reflect into the chart as well. So I'm going to be watching these inflow versus outflows very carefully within the volatility. And the first support I'm watching is 403, right below 404 of the low of the day. 403 is the first support that I'm watching. Below that is 400. And to the upside, I'm going to be watching 408 as it rejected there multiple times, as well as 410, guys. If 410 gets broken through, the next resistance is 412. And above that is 415. Those are the key levels that I'm watching. I look forward to seeing your thoughts down below. And as always, guys, thank you guys so much for watching. And let's make some money.